happen to the distribution of these tokens, and that's a red flag. Okay. Now, let me make sure I covered everything here. Okay, so let's talk about the VC tokenomics. So when you have a VC coin, this is what happens before the token is launched, the sort of private valuation, when a VC goes, okay, I would like to invest in this project at a $300 million valuation, right? That's not a liquid token, but it's still a valuation. Because when you think, just so you know, when these new projects, before they have a token and raise money, the first raise is usually like here, like I'll draw it like here, and then the second raise is here, and the third one's here, and then finally it's liquid and it's worth this. Okay? So if you buy a VC coin, you need to keep in mind that the bull market for this coin happened before you could even buy it. It happened before the token was even liquid, and that's a problem. And that's why a lot of these VC coins are, not worth buying. You can make, like, a lot of them are good. Like C is great, Solana's done great. You can make money, but you need to keep in mind it is risky. And so what ends up happening a lot of the time is, the VCs get rich, the token launches a little bit of a pump, for a few months, and then the VCs get unlocked here, and then the token dies. Okay? Now, let's talk about what the two main types of coins are. There's two types of coins in my mind. There's coins which are called retail coins, and there's VC coins. So a retail coin is basically... usually a retail coin is one that does better than a VC coin in terms of percent returns, but you can absolutely make a lot of money on both of these, and there's not really a right or wrong answer, okay? Both can be good, both can be shit. Whatever you do decide to invest in, whether it is a retail coin or a VC coin, the main thing is that you understand Sorry, my nose is really itchy. The main thing is that you understand that there's certain, advantages and disadvantages of both. If you got a retail coin, it's much more important to focus on the team. If you have a VC coin, it's much more important to focus on the tokenomics. And we'll get into why that is soon. So for me, a retail coin is basically a coin which prioritizes making its holders rich versus VCs. It's a coin where it's really focused on retail investors, getting them a fair entry price, all that sort of stuff. So maybe a retail coin, is one of these ones. So Casper was a fair launch. Anyone could mine it. Anyone could buy it really early. There was no insiders who had tokens waiting to get unlocked, etc. OXO, fair launch. They just launched the token. The full supply has been released. There was no VCs. There was no pre-mine. The team doesn't have any tokens. It's all fair. Toshi, retail coin. It's just a meme coin. There's a 3% buy and sell tax. That's how the project founder makes money. The token doesn't really have any. It doesn't have any VCs. The founders don't have any tokens except for what they get from this tax. And it's fair for retail. Now, a VC coin is basically Solana, Aptos, DOT, any of those layer ones. A lot of the gaming coins tend to be VC coins, and yeah. So yeah, the entry to the retail coins is relatively fair, meaning that everyone must compete for the token at the same price range. So, let me show you that photo again. When it's a VC coin, you can't buy here. You can only buy here. So you miss like the first 10x. In a retail coin, this is all normal price action. You can buy it here. Okay? Now, with retail coins, the supply and demand dynamics tend to be better. Because, like I said before, retail tend to hold things for longer and to higher prices. They tend to not like selling. And VCs are different. They tend to hold things for shorter and take profits earlier. And they tend to not like to hold things. A VC makes most of his money from getting into coins that most people can't get into because they run a VC fund, right? Imagine you buy Solana or sorry, imagine you buy imagine you buy a layer 1 coin, a new pre-sale during a VC round, and you make a 10x, and now your tokens are unlocked. You have two choices. Do you hold these tokens even though you have no edge, and there's risk that you lose your profit, and you have your investors breathing down your neck? Or do you sell the 10x and then put this money back into the next pre-sales, which you have an edge in, and then wait till those go 10x and just have this infinite money printer of putting money in, 10x, pulling it out, putting it in again, another 10x, right? It's like an endless loop of money. What would you prefer if you were a VC? Well, obviously you'd pick taking profit and investing where you have an edge, right? There's not much edge in liquid token investing with these VCs. A lot of them focus on getting these seed rounds, these Series A's, Series B's, whatever it is. Now, obviously, I think this trend will change over time. I think liquid token investing will become more popular amongst venture capital firms, but at least for now, it's mostly about getting into the private raises. And yeah, to summarize VCs in one word, I would say they're very extraction-based, extractionary. Now, retail coins aren't all perfect. The disadvantage of a retail coin is that the team and the community tend to be filled with people who don't have exchange connection listings. They don't have amazing KOL they don't have access to influencers. They don't have marketing strategies. They tend to not be as skilled, right? If you can't raise money from a VC, you tend to be not as good at what you do. So you have to be careful with these retail coins, because a lot of them end up dying pretty quickly because they're just run by a very incompetent team. Just because it's a fair launch doesn't mean it's a good coin. Oh yeah, I launched this fair launch coin, there's no VCs, it's so good. Are you good at building? Probably not. So you have to weigh up the advantages and disadvantages here, right? The main thing that you need to focus on is the team. The team and the community is much more important for retail coins. All right, now let's talk about VC. We've gone over this a bit, what it is. The holders are extractionary. They just want to profit as early as possible. Because the reason a VC doesn't like holding is they know it's a scam, right? They think crypto's a scam. These tokens shouldn't have value, and they just want their profit, and they just view retail as exit liquidity, or they have to meet profit targets for their investors, meaning they'll likely sell at a smaller multiple to guarantee their investors are happy. And this is why most VC coins die off after 6 to 18 months. But the other side of the coin you need to keep in mind is that the retail coins maybe can survive better long term, but they have a higher short-term failure rate. I know so many of these retail coins that just die off because they don't have the ability to get this project from 0 to 1. They don't have the ability to build a really strong community, to get exchange listings, to get that initial traction. But whereas VC coins, they tend to be able to get that initial traction easier going from 0 to 1. But going from 1 to 10, a lot of them find really hard. And they end up dying off after 6 to 18 months, okay? So yeah, tokenomics is much more important for VC coins. So yeah, this is a summary of, retail, they tend to die earlier, but the ones that survive longer, and vice versa for VC coins, okay? Now, I want to show you this concept of VCs viewing retail as exit liquidity. I think there's a video here about it, so let me put this on and I'll show you what I mean.
What is the exit event? A lot of the venture capital that has come into crypto more broadly as an asset class has come because there is liquidity in investing in tokens. And we can ignore it, we can pretend it doesn't exist. But incentives drive behavior, and I think one of the big incentives we've seen play out in the crypto venture space, 35 billion in LP capital last year went into funds. Why did that capital go into a lot of these funds? Because they're able to deliver cash back to their LPs by investing in new L1s, L2s, dApps, things that have a token that enable this faster turn on getting an exit event to liquidity event. And that's where the challenge really is for the Bitcoin space. So that's why I'm excited that we have ordinals, we have BRC20s, because they actually start to maybe enable us to generate new streams of revenue. What is the exit event? A lot of the venture capital that is...
So, I know if you're watching that, you're probably like, what's she talking about? The fuck did she just say? But basically, when she mentioned the exit event, what she means is that the VCs, once they get their tokens unlocked, because they don't get them... A VC cannot sell their tokens as soon as the token launches, right? A VC has to wait a bit. So as soon as they get their tokens unlocked, the exit event is, oh yeah, I can sell my tokens now to a bunch of retail investors. And so they just basically find projects, invest in them, wait for the token to come out, wait for them to get unlocked, sell them to retail, take the profits, put it into the next new layer ones, and repeat the process on and on and on. And they talk about it like it's normal, like it's fine to just buy and sell and dump all these fucking coins on retail in a 6 to 18 month loop, right? The game is just 12 to 18 month pump and dumps. And I can show you a classic example of this, right? Reserve rights. Just a classic fucking 6 to 18 month pump and dump. Let me show you. And this is a VC coin. Okay, it's taking a bit to load. Where is my internet gone? Okay, well, let me give that a second to load, but yeah, she just basically admitted to running a 12 to 18 month pump and dump. Now, is the VC game not just the same everywhere in stocks and everything? Well, technically, when you do an initial product offering and you get your stock to go, you get your company to go from a private company to a publicly listed company on a stock exchange, that's called an IPO. You're creating a liquidity event, which is an event where you're able to access liquidity to sell your stocks on an open market. And you can argue that this same 12-month pump and dump cycle happens on the stock market over a longer time frame. For example, Uber had an IPO, and all the early investors got to they got this liquidity event where they sold to all the public investors, and I think Uber did its original raise maybe like a decade or something ago or less. So the same cycle occurred for Uber, except it took a lot longer, which is good though, because generally to build a real company, it takes a long time. And sorry, just get my legs in the way in this video. Generally, it takes a long time for a project to actually build, get users, get revenue, make profit, all this sort of shit. So the fact that a VC can buy and get unlocked and sell within a year is ridiculous, because you're not giving this project enough time to build something. So you just end up dumping on a bunch of investors before this project's even done anything. It's not really fair, right? Imagine if Uber IPO'd at like a year after it launched, all these VCs got a super cheap price and they're just able to dump so quick. You have to lock them up for longer. So that's why crypto can be very volatile, because you have these crazy pump and dumps. Let me show you. Oh, it looks like it's ready now. See, look, May 2020 and I guess May 2022. So it's 2 years, right? In 2 years, it had the same price. Big pump and dump. So anyone who bought here, which is retail in the bull run, lost all their money. And all the VCs buy here, or I guess they bought before the token came out, goes to here, the VCs get unlocked, they sell down here. Now, just to keep in mind, I think RSR was at the same price down here as what the VCs got, so you arguably were entering with the VCs, but that's not the same for most of these projects. For most of these projects, you're entering 5, 10, 20 times higher than what the VCs got in at. Now, let's go over some of the tweets here that I had. So,